The World Bank Group's private sector arm has reportedly warned that the Asia-Pacific region risks a damaging financial crisis as non-performing loans surge. This as bankruptcies rise because of the economic crisis caused by the COVID-19 pandemic. In an interview with Reuters, Alfonso Garcia Mora, Vice President for Asia and the Pacific of the International Finance Corp, said insolvencies are expected to rise by 30%. He said that while many firms have been given moratoriums on their loan repayments, many central banks are not requiring financial institutions to regularly monitor these firms' solvency, which is very dangerous. Citing an analysis by the World Bank and the Bank for International Settlements, he said about 50% of firms will not have enough income to service their loans in the coming year. Garcia Mora told Reuters that what can happen is that when the banks open their books in 6 months or in 12 months, they will realize that their non-performing loans ratio is not 2% but 20%. The Statistics Department says employees in Malaysia saw an average 4.4% hike in monthly earnings last year, though any increase this year will likely be smaller, no thanks to the pandemic and ensuing movement curbs. According to the 2019 Salaries and Wages Survey report, the average monthly salary and wage rose from 3,087 ringgit in 2018 to 3,224 ringgit in 2019. Meanwhile, the median monthly salary and wage improved by 5.8% from 2,308 ringgit in 2018 to 2,441 ringgit in 2019. Gender-wise, the average monthly salary and wage of male employees rose by 4.1% to 3,304 ringgit. For female employees, it was a 5% hike to 3,108 ringgit. The median monthly earnings of male employees saw an improvement of 5.8% to 2,477 ringgit, while female employees saw a jump of 6.8% to 2,370 ringgit. As for this year, the Statistics Department expects the COVID-19 outbreak to especially hurt the earnings of those employed in the wholesale and retail trade, repair of motor vehicles, and transportation and storage sectors. Employees in the accommodation industry, food and beverage services, and the arts, entertainment, and recreational sectors are also expected to be affected. Top Glove Corp recorded its best ever quarterly net profit, with fourth quarter FY20 earnings blowing past analyst estimates to 1.29 billion ringgit, as it witnessed a global surge in demand for gloves on the back of the COVID-19 pandemic. This is almost 18 times the 74.17 million ringgit posted last year. Revenue jumped 162% year-on-year to 3.11 billion ringgit. The board recommended a final dividend of 8.5 cents per share, bringing the total FY20 dividend payout to 11.8 cents apiece. That's a net profit payout ratio of 51%. Top Glove Executive Chairman Tan Sri Dr. Lim Wee Chai says the group is very pleased with the strong results. Going forward, the company expects more upside in demand to push the group to fresh highs in FY21, with rubber gloves to remain in high demand even when a vaccine becomes available. On the capex front, the group has earmarked 8 billion ringgit over the next 6 years to give it an additional capacity of 100 billion pieces of gloves per annum. It currently has 46 factories and 724 production lines, with an annual capacity of 85.5 billion pieces of gloves. The Naga National has, via its wholly owned subsidiary TNB International, completed its acquisition of Beauforts Investments' 5% controlling equity stake in UK's Vortex Solar Investments for £11 million or 59 million ringgit. The utility giant said in a board's filing that the acquisition will increase its equity interest in Vortex Solar to 55%, giving it control of the £500 million or 2.68 billion ringgit solar energy portfolio. Vortex Solar is one of the largest solar platforms in the UK, with a renewables obligation certificate subsidy scheme comprising 24 operational solar farms with a total combined capacity of 365 megawatts. TNB first acquired a 50% equity stake of the portfolio in 2017 for £86 million or 468.51 million ringgit. It said the portfolio generated earnings before interest, taxes, depreciation and amortization of £39 million or 208 million ringgit last year, with an 84% EBITDA margin. Upon completion, the acquisition is expected to contribute positively to TNB's earnings. Sapura Energy says its wholly owned subsidiaries and joint venture have bagged contracts and contract extensions with a combined value of about 840 million ringgit across Mexico, Brazil and the Ivory Coast. The oil and gas support services provider said in a Bursa Malaysia filing today that the Mexico and Brazil jobs involve engineering and construction work, while the Ivory Coast contract involves a drilling project. The contracts will have no effect on the issued capital of the company and is expected to contribute positively towards the group's earnings for FY21 and the ensuing financial period within the duration of the contracts. Sapura Energy, which did not specify individual values of the contracts, said the Mexico and Ivory Coast projects are new contracts, while the one in Brazil is an extension. The Mexico works are expected to be completed by the fourth quarter of FY22, while the Ivory Coast contract will start in the first quarter of FY22 for 9 months, plus one option of one well extension.